From San Antonio, Texas, home of the Alamo, the Riverwalk, and the World Heritage San Antonio Missions, this is the Exit Planning Coach podcast with John F. Dini. Designed to help advisors who work with business owners, John talks with top professionals in the exit planning field about best practices, marketing tips, and how to be more effective when working with owners. Now, here's John F. Dini.
Hi, and welcome to the Exit Planning Coach podcast. I'm here today with David Brackenbury of Dealer Exit Planning Associates. David founded Brackenberry and Associates in 1985 as a planning firm working exclusively with owners and their families in auto dealerships. And he's primarily focusing on complex succession and exit plan strategies. In 2020, David rebranded the firm to Dealer Exit Planning and has new resources, partnerships, and strategic alliances to align with the issues that automobile dealers face. David feels it's imperative to understand the three domains in the discovery of the eventual desired outcome: family, business, and ownership. And we can talk about that. I'm sure you've seen the little graph of the three overlapping circles. Mm-hmm. And in the middle there, it's like there be monsters. David's got a degree in economics from Moravian College. He's an accredited certified family business specialist and a business succession planning specialist from the American College in Bryn Mawr. And he has a degree from Purdue University in advanced insurance planning. He and his wife, Joanne, reside in Bethlehem, Pennsylvania. They have 3 children and 4 grandchildren. Welcome, David.
Welcome. Thank you.
This is the first time we're meeting. It's a pleasure to talk to you.
You as well.
Our first interview with advisors is always about your practice and how you go about doing what you do. So let me ask you first, what led to your decision to work with business owners, especially auto dealerships? Did you work with auto dealers from the very first time you started exit planning?
It happened, I would say, almost by accident. I had a client who best friend was a car dealer, and I called on him and we began to have a conversation, and it was interesting. He said, I think before we go any further, you should see my sales and service agreement. Now, a sales and service agreement is the contract between the dealer, operator, and the manufacturer. Wow. And it places certain restrictions on that dealer on what he or she can or cannot do. And it seemed to me that the opportunities to separate myself by understanding the complexities that dealers faced would be an advantage to me.
Do they typically have change of control clauses in those?
Yes, they do.
So manufacturer has to approve anything that you want to do.
They have to, if you want to sell or transfer. For example, if a dealer owns 100% and he wants to transfer a percentage of the business to one of his children, he has to have that approved by the manufacturer. Or if he wants to sell, whoever purchased the dealership has to be approved by the manufacturer. And the manufacturer has the right of first refusal on any of those purchases.
How problematic is that?
Well, I think if someone just off the street was going to buy a dealership, I think it might be problematic. I think what you're seeing in today's market is the acquisitions by existing dealers buying dealerships. So I think for someone just to get into the business, it might be problematic. But I think in most situations we're seeing now, dealer groups are buying other dealerships.
When you're dealing with a dealer group, do the manufacturers have a no-go competitor that if you have a dealer for a certain competitor, there's no way they're going to approve you?
I don't think so. No, we've worked with dealers that have, multiple brands. We have a couple of dealerships that are in the top 150 in the country, and they may own 7, 8, 10 different brands. So it's not an issue.
If you would describe your typical first meeting, I assume do you get referred? Are you out speaking? I was going to ask about marketing later, but since I stumbled into it, let's ask now. How do they find out about you?
We do quite an extensive amount of marketing through our firm. We do not deal in what we would call a large volume of dealerships. If we can work with, say, 5 to 8 new car dealerships a year, that's about our capacity. The work is extensive, obviously, because of the travel. That takes time. So we're focused on a target market, and then we're totally focused on that target market. I once said that some people try to shoot elephants with a BB gun. We try to shoot elephants with a sniper rifle, or a mouse with a sniper rifle. We're very focused on what I would call, in most situations, the ideal prospect. For us, that's someone probably between 55 and into his late 70s, with family in the business, family outside of the business, with a strong desire to pass that dealership to a next generation.
Okay, so you're really a specialist in family transfers.
That's our marketplace. We have done a few where dealers have sold, and we've looked at some valuation issues and income issues. But I think our sweet spot is that individual who wants to transfer that business, to a member of his family. I think that's our perfect prospect.
Well, you talk about complex planning. I mean, one of my favorite situations, and I'm being facetious about it, is when one of the spouses of the owners, and it can be male or female, but frequently it's the mom, announces that she wants to see the business pass equally to the children who are in and outside the business.
We have a situation where we have a dealer who is very, very successful, and we don't call them dealerships; we call them stores.
Okay.
And he owns 2 stores, and we made a recommendation a couple of years ago that he begin a very aggressive gifting program to his son, who was active in the business, who was running the businesses, who was paying them substantial rents, substantial S distributions, and a salary. And mom says, if we're going to give our one child all of this, we have to give the other 3 identical amounts of money. The only problem is they don't have any money to give the other children. And so here we are going around in circles with issues still. So, yeah, I mean, it's, the family dynamics, it's always there. And, it is a challenge because they are family businesses.
Yeah, we talk about the difference between equal and fair.
I agree. Equal is, I always use the term, if one of your children goes to Yale and one goes to a community college, you don't write a check for the difference in tuition, do you?
Excellent point. I love that. I'll steal it, and like most consultants, I'll attribute it to you. I'll attribute it to you for the first 3 times. Then
very good. Thank you.
How do you wind up with a new client? Somebody calls you up and says, your name was given to me by, or?
Referrals, can be valuable. We do an extensive amount of marketing through email campaigns and so forth. We're going to be currently launching Your 14 program I believe on the 15th. We're going to launch that.
Oh, great.
So we do that. Over the last couple of years, we've been getting more and more active in LinkedIn, which has really helped, because of all the information we have about car dealers. We're able to, do posts on LinkedIn, which has been very, very fruitful for us. And we're very pleased with that. But again, I think, what we're not looking, for 200 people.
Sure.
And so, and even though, and we have to be selective, as you would know, once you get started, there's a lot a lot of work to do.
Mm-hmm.
But, to get to hopefully to some, successful end to what you try to accomplish.
Someone calls you up and says, I was given your name or I got your email or something and I'm interested. And by the way, you said something about the travel. Let me get that straight first. Do you work nationally or?
I have clients I have actually clients in Texas. I have clients in Iowa, Florida, up into New England, out into the Midwest. So, yeah, it's quite a bit of travel. Mm-hmm.
Okay. So I call you up and I say, David, I saw or heard or whatever. Mm-hmm. And do you come out and talk to me? Do you always do it in person? How do you do your first interviews?
Most of them I do in person. What we try to do if we have that conversation, I try to qualify them first to determine if they're a fit for us.
Mm-hmm.
Not everybody's a fit. What I have found often with Zoom meetings is that people get distracted. You and I are obviously committed to this meeting, but I've often found on Zoom meetings that the dealer gets distracted and all of a sudden he's talking to a salesman or to a customer and all of a sudden we're finished. Mm-hmm. And so once they're qualified, we're willing to go to the initial meeting where we would lay out what we call, the process, what we would expect from them, which is, the full fact-finding interview, meetings with family members, husband and wife meetings, financial statements, tax returns, all of those things. And once, we get that commitment, then we can move forward.
What do you think we all talk to prospects that don't hire us. What do you think is the most important factor in turning a prospect into a client?
I have it all done is like the easiest response everyone seems to want to use. It's when for me, a car dealer realizes that he does have problems that need to be fixed. There are issues that are unresolved and that he knows that something has to be done to fix it, and that's the challenge, to get someone from being comfortable to being uncomfortable with where he is,
Sure.
In
sales training, that's finding pain points.
Yeah. Is the plan you have now the plan the plan you want to have, it's, and so, I think that's the challenge, to create the concern. Maybe I don't have it all done, but, I always say that, if a car dealer says, I have it all done, I say, that's similar to the guy who's coming on your lot. He knows what car he wants to buy. He's already figured out he wants to buy it. He probably knows what his trade is worth. And your salesman walks up and says, "Can I help you?" He goes, "Oh, no, I'm just looking." It's sort of the same thing. It's that sort of defense mechanism.
I think it's time to take a break. Let me take a break. Let's pay for the podcast. We'll put some promo up here, and we'll be back in exactly 60 seconds. Hello, John F. Dini here, and I'm very excited to announce the publication of the Exit Planning Coach Handbook. Inspiration for the handbook comes from my 25 years of working as a coach to business owners, with 12 of those years dedicated to helping them plan their business transitions. It is a guide for advisors that explains why working with business owners is so dramatically different from working with other executives. It provides insights on how to approach planning conversations with owners more effectively. Plus, it takes you through the steps that will help you develop your relationship as their most trusted advisor. I wrote this book for advisors who want their clients to move on to a second act that's even more rewarding than their first. If you read any of my previous books, you know I don't lecture. It's a conversation between two professionals. If you work with business owners, I strongly encourage you to read the Exit Planning Coach Handbook. I think it will quickly become a go-to in your reference library. It is currently available on Amazon and the Kindle store, in paperback, and as an audiobook. Okay, welcome back to the Exit Planning Coach podcast. I'm here with David Brackenbury, and we're talking about his planning practice for automobile stores. Before, during, or after a planning engagement, and perhaps all three, how would you describe your ideal client relationship?
I would say that someone that we can continue to have an ongoing relationship with over, we have, matter of fact, tomorrow I'm meeting with the third generation. That to me is when you can deal with someone, from 35 years ago and see the transition from him to his son, and then, from that son to his son,
Wow.
To me, that's just really wonderful.
Oh, that's outstanding.
To be able, share a story with the third generation about his granddad, and how different business was and how things are today. But the concerns remain the same. The concerns are identical as they were 35 years ago.
Yeah, I'm sure. That's neat. I have not had that privilege yet of doing a second transfer. And you've been doing this for a long time. I mean, you've been doing this before. I know 10 years ago when I said exit planning to people, they had no idea what I was talking about. You've been doing it for 30 plus. Mm-hmm. What'd you call it when you started out?
Basically, it all started out just working on the insurance end of the planning, just saying, we're the insurance people, you've got an attorney, you've got an accountant. We were just focused on providing the liquidity needs, for all the issues that they faced. We have come full circle because, what we found is that it has expanded now to where, the legal aspect is probably 20%, 10%, 25% of the work. The valuation is a percentage of the work, but the work really doesn't really revolve around all those things. It revolves around all the issues that are facing them, and who's willing to take the time to find out where all those issues are. The perfect example is, you need a buy sell. Well, do you really? Have you really talked this through? There are two brothers. Well, do you want to buy sell, or do you want other family members to be, part of this dealership? That it's just not what I would call so boilerplate, so cut and dried.
Sure.
You need this, and this, and then you're done. You have a buy sell, you have a will, you have a trust, you have some insurance. Oh, it's all done. No, it's not, because again, going back, as you said, the fine line dynamics. What's really going on here?
Yeah, I've got a coaching client right now, and of course, you're speaking to, our core principle of coaching the client, and not just giving them, a pat answer. But I've got a client right now, and they did not have a buy sell. I've never had a buy sell, and they are now entering the fourth. He's taking over as the fourth generation president of the business, and he has 3% of the company, and he's the only owner employed there. And he's having some real difficulty trying to figure out how he's supposed to work his tail off to build the company when 97% of the shareholders show up once a year with their hand out.
Mm-hmm. I have a great story about those types of things. I had a car dealership that the father retired probably in his late 50s. He moved to Florida. The son, who owned 30% of the dealership, who tried to buy the balance or get it from his father, couldn't, built the business from one franchise to 4. And at the father's death, the son's sister came to him and said, well, now we need for you to buy out the balance of Dad. And, I've talked to my husband and he thinks we should hire an independent accountant to value the business. And he said, well, I've been paying Dad for 30 years, all of this money, and I think we should be able to recognize all of these things as, part of the value. And she said, well, I don't think so. And they ended up actually having to sell 2 of the dealerships to pay off his sister, who were next door neighbors. But, one of the things, a perfect example, I think, of what I've seen that's made us much more aware of the need to be involved at a greater level than just providing the insurance. You talk about a buy-sell, and often what we have seen is that, buy-sells are structured to provide the lowest possible value for the dealership, and then, 2 brothers, the brother A passes away and brothers, B wife hands his lovely sister-in-law a check for a couple $1 million, and she puts that in the bank, and now she's making, 30 or 40 or 50,000 off an investment, when before that they were probably making $600,000 or $700,000. And now how do you live? And I think, one of the issues that we talk about extensively with car dealers is what's the really true value of this business? What's the economic value of this business? And even, if they're going to sell, we had a dealer last 2 years ago, sold his dealership for what he thought was a substantial amount of money. And then he handed it to a couple of investment fellows. And after they lost about half of that money, he realizes that he'd been much better off probably keeping that dealership and not selling it, in the situation he did. But I think that's, a well-run car dealership can be an extremely strong, revenue source for a family. Extremely strong revenue source.
You talk about valuation. As a specialist, do you have a specialist team of people that also, like valuation attorneys, accountants, that really know car dealerships?
Yeah, we've developed relationships with at least one major accounting firm that we do refer evaluations to. We will use Biz Equity, through our own group.
I use Biz Equity myself. Yeah.
Right. To begin to look at valuations. But if we're going to, do gifting or, for some major, tax planning, then we will refer the valuation to a CPA firm that we have used historically. They have offices, all over the country. And I've had that relationship, they work with car dealers, we work with car dealers. And so, they know what they're, the valuations they do are going to be spot on.
How about legal?
We have a couple of firms that we use. I have a firm that I've used for 35 years that we refer business to as well.
Do you have an issue that keeps coming up with clients that you just have a process that you figured out? And when you see that, you go, okay, we're going to do this because it works and I've done it a million times before?
I think for me, there are 4 basic issues that most car dealerships that we're going to work with are going to face. And I think the first is obviously, what we would call the security issues. How are we going to protect all those people that need to protect it? The woman this man has walked or woman's walked through all his life with, what happens to her if he doesn't wake up tomorrow morning? I mean, That's obviously a huge issue. The second is, the transfer of the business. How will this take place? Will it be gifted? Will it be, purchased? Will it be inherited? That's, a major issue. The third issue that I think is critical, as well as, the fairness issue. An individual owns a car dealership. Let's say the car dealership and the real estate are worth $8 million. And he's got 5 children.
Mhm.
How does he, deal with those other, 4 children when it comes to being fair, but not equal, but being fair? And then, and I think the other issue, which, for a period of time was not a major issue, which I think is going to become another issue again, is estate liquidity, with the potential of the reduction of the lifetime exemptions. I
Yeah.
think that will begin to impact dealers that weren't concerned. Today they're not concerned, but from in a couple of years they're going to have to be concerned because values are higher, and so and the lifetime exemption, if it goes down, the estate issue will become an issue again.
Yeah. Yeah. I was thinking about that the other day. It's been a while since I've seen, the grats and the idiots and stuff used widely, and it's all because the limit's so high right now. They will come back very quickly.
Right. So I think that those are the for security, the transfer of the business to fairness issue and estate liquidity. I think most of our prospects are going to at least have 3 of the 4 of those, and usually 4. And the other thing is like every other business, they're illiquid. These dealers have their assets tied up in used car inventory and parts.
Sure.
And so, yeah, and the other thing which is interesting, and a car dealer each month has to provide a financial statement to the manufacturer. And they have something called a capital standard. They have to meet certain financial standards set by the manufacturer. So, they have to keep money in the dealerships. And so the financial restraints placed on them can be very difficult.
Yeah, I was working on the reporting side. I was interviewing a very successful car dealership out here, did a very high end, used the Jag Ferrari and something else, Maserati or something dealer. And he had joined a 20 group, as I'm sure you're familiar with those peer groups. And they had decided to completely standardize their general ledgers. And they spent a year standardizing every single line item in their general ledgers. And he said it was useless because at the end of the day, how you build your floor plan, how you finance your property are such major things that differ from shop to shop, that it really wasn't that people were getting much greater margins on the vehicles. It was how they structured the business itself.
A number of years ago, I was invited to speak at the AICPA conference. And I would say on a scale of 1 to 10, it was a 0. I talked to 600 CPAs about family dynamics, and it was just dreadful. But about a year later, I got a phone call from a CPA in Texas. And he said, I listened to your talk and I didn't think much of it at the time, but I've been thinking about it a lot. He said, we have a car dealer in our area that owns 3 car dealerships. And we have, with the attorney and our firm, the accounting firm, we put together a business transition plan to 3 of his general managers. All the financing has been approved. There's insurance that's been approved. The legal work has been drafted, and we have gotten nowhere to get the dealer to sign the paperwork. And I thought about you, and if you're willing, we'd like to bring you out and talk to the dealer. And so I said, okay, I'll do this. So they flew me out to Dallas and got in a car and was driven to this car dealer, one of the car dealerships. I'm sitting behind me, and at his desk is sitting with his cowboy hat on, chewing on tobacco. And I said to him, so, I've looked at all the planning and it seemed to make a lot of sense. there has to be some reason that you haven't, finalized the plan. He said, well, I wanted to get the lots repaved. We have to change some lights. I'm not comfortable with the used car situation right now. And I looked at him. I won't mention his name because that wouldn't be fair to him.
No.
And he said, I didn't come all this way for you to blow smoke up my, what. And he looked at me and he said, I've worked all of my life and I don't want to do this anymore. I want to spend time with my grandkids. And if I stay here, if I do the plan, I have to stay here. And I said, well, why don't you just sell? Just walk away. He said, you mean I can do that? And I said, well, they're your stores. You can do whatever you want. Well, he sold his stores. And he sent me a picture, a postcard. A year later, he was on a Disney cruise with his grandkids.
Right.
I mean, so yeah. So that's
well, and that's why I'm sure you've gotten a copy of the Exit Planning Coach Handbook. I mean, you got to ask them what they want.
Right. You have to ask them what's important.
Too many advisors start whipping out the advice before they know what the owner really wants.
The Chinese menu, 2 from A and 1 from B, right?
Right. Hey, we're an advisor to advisor podcast. So if anybody wants to get a hold of you, of course, it'll be on the posting when we put it up. But why don't you give everybody your information, how they can contact you?
Sure. My email address is david.b as in boy at dealerexitplanning.com. And my cell phone number is 610-392-7030.
Great. And a wrap-up question in every one of these interviews. A lot of people are getting into exit planning nowadays. And whether you're doing car dealerships or contractors or manufacturers, there's a lot in common when you're doing exit planning for a privately held business. What would be your advice to somebody just getting into the exit planning world?
For me, what helped me when I started in the business was I worked for an experienced agent for about 7 years. And I learned so much from him that I was able to grow and move on. I think one of the issues that I often see is that people are unwilling to take a percentage of something very nice where they would like 100% of what I would say nothing, and I think, getting a mentor or someone to work with, who's experienced, who knows what he's doing and learn is probably the most important thing.
Great. Good advice. Appreciate it, David. A pleasure talking to you. I'm glad we had this chance.
Great.
And hope we can get you back at some point in the future.
Very good. I would look forward to it. You take good care. Thank you.
Bye-bye.